Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 25th, 2025, and we're diving into Best Buy's third quarter earnings report for fiscal year 2026. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Best Buy has released some interesting numbers this quarter, and I'm excited to break them down with you.
Great. Let's get started with an overview of the report. Best Buy reported a comparable sales increase of 2.7% and an adjusted diluted EPS of $1.40. What are your initial thoughts?
Well, the adjusted EPS of $1.40 is quite impressive, especially considering the analyst's forecast was $1.31. This indicates that Best Buy has outperformed expectations, which is always a positive sign for investors.
Revenue and profitability overview. Let's start with the top line. Best Buy reported a total revenue of $9.67 billion for Q3 FY26, up from $9.45 billion last year. John, can you shed some light on this growth?
Absolutely. The revenue growth is primarily driven by a 2.4% increase in domestic comparable sales and a 6.3% increase in international comparable sales. The domestic segment, which accounts for the majority of revenue, saw significant contributions from computing, gaming, and mobile phones.
And what about profitability?
Operating income as a percentage of revenue was 2.0%, down from 3.7% last year. However, the adjusted operating income rate improved to 4%, indicating better cost management and operational efficiencies.
EPS performance and analyst expectations. Now let's talk about earnings per share. Best Buy reported an adjusted EPS of $1.40, beating the forecast of $1.31 from 11 analysts. How significant is this beat?
This is quite significant. Beating the EPS forecast by 9 suggests that Best Buy is effectively managing its operations and costs, even in a competitive retail environment. The adjusted EPS reflects the company's core profitability, excluding one-time charges like the Best Buy Health impairments.
And the GAAP diluted EPS was 66 cents. How does this compare?
The GAAP EPS is lower due to non-cash asset impairments related to Best Buy Health. These adjustments are crucial for understanding the underlying performance, which is why the adjusted EPS is a better indicator of the company's financial health.
Operational efficiencies and future outlook. John, let's discuss operational efficiencies. Best Buy's gross profit rate was 23.2%, slightly down from last year. What does this tell us?
The slight decline in gross profit rate is due to lower product margin rates, but it's offset by improvements in the services category. This indicates that Best Buy is leveraging its service offerings to maintain profitability.
And looking ahead, Best Buy has raised its full-year guidance. What are the key points here?
Best Buy has increased its revenue guidance to $41.65 billion to $41.95 billion and adjusted EPS guidance to $6.25 to $6.35. This reflects confidence in their Q4 performance, especially with the holiday season approaching.
Company leadership statements. Let's hear from the leadership. CEO Corie Barry mentioned strong results across computing, gaming, and mobile phones. How does this align with their strategy?
Corie Barry's comments highlight Best Buy's focus on key growth areas. By capitalizing on consumer demand for electronics and innovation, Best Buy is positioning itself well for continued success.
And CFO Matt Bilunas raised the full-year forecast. What does this signal to investors?
Raising the forecast signals confidence in their business model and execution. It suggests that Best Buy is well prepared for the upcoming holiday season, which is crucial for retail performance.
Key takeaways. In summary, Best Buy has delivered a strong performance in Q3 FY26, with impressive sales growth and a significant beat on EPS expectations. The raised guidance for FY26 further underscores their positive outlook. John, any final thoughts?
Best Buy's strategic focus on key product categories and operational efficiencies is clearly paying off. Investors should keep an eye on their performance in the holiday season, which could further boost their financials.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Best Buy's performance in the comments below.